Stocks trying to hold on to this head of steam this morning. Dow's up 80 points. NASDAQ just hit another record high. Big tech, of course, joins the earnings fund tonight with Netflix after the bell after a strong start to the year. Joining us this morning is Needham analyst Laura Martin. A $1,500 price target and a buy rating on the stock, Laura. It's good to have you back. I've seen a lot of 1100s and 1200s, but is that close to a street high?
You know, it might be, but, you know, we're really looking forward to this earnings season for Netflix because we're looking for accelerating revenue growth, accelerate margin expansion, and almost a double in growth rate of EPS in the second quarter compared to the first quarter. So if these fundamental trends hold up like we think they're going to, I think we'll end up being right on this one.
How do you think the street's absorbing, I guess, what we're calling a little less transparency on subs? And I guess, do they have the cushion to spend as much as they want still?
So far they're spending, specifically content spending, which is what Wall Street cares about. It's really been stable around 17 billion. I think Wall Street would be okay if they went to 18 billion. But within that 17 to 18 billion, we really want to see any live sports spending fitting in that and substituting, not being additive. As long as they hold, if they're growing top line at 15% and keeping content spending at that 17 to 18 level, their returns on capital are going up exponentially, which is good for fundamentals and the stock price.
Why? What's driving this growth surge?
So they just raised prices everywhere. Any of you who have the top tier or the ad tier, just watch your prices go up by anywhere from like 15% to 20%. So price increases, which generally leads to churn. So we'll be listening carefully to what they're saying about churn. But really, it's price increases, and let's call it price it's inelastic. People hold on even if prices go up.
We always like to play the game, Laura, of things they said they'd never do and then did, right? Original programming, an ad tier, live events, sports. Is there anything else you think that they would? Are there other U-turns to make?
Well, I would say one thing we're really cautious about or looking at, want to hear their logic on, is their first quarter share repurchases were 3.5 billion, which is half of the entire last year, 2024. Is that the best use of capital in a generative AI disrupted world? I think we sort of want to hear how they're thinking about generative AI and what it does to costs in their business and what it does to competition in their business. And really, is spending all the money buying in shares the right use of capital when generative AI might change everything all at once?
How are they dealing with generative AI? And they have such a treasure trove of data, much of which they don't share necessarily. How are they using that in AI?
Yeah, so they've been really sort of silent on this. So I think we're dying to hear that. I hope they get some questions on that and they answer that. Maybe they'll say we're not dealing with it at all because, you know, the guilds don't really allow them to use generative AI in a lot of capacities. But they should be using it to cut costs internally. That's not against the rules. So I do think it's just, I have companies, as you know, in my coverage that are spending $60 billion a year just on generative AI. So the fact this company is buying in shares, I think I just want to hear the logic of that. That's all.
Right. As for the media names in your space, the Disneys, the Apples, the Warners, are any of them collapsing? Any white space between them and Netflix on the streaming front?
Yeah, definitely. I mean, I think what's happening is in a generative AI world, data becomes more important. So like Disney really has a much better value proposition because Disney has theme parks, which has globally, which has real world data points, and it sells merch, and it says ticket sales for films, and it has streaming. So I think that portfolio of data points is actually far more valuable than Netflix, which operates in a single silo called streaming.
Right. Look forward to getting your take after the print in the coming days, Laura, if we can manage to get you back. Good to talk to you as always. Laura Martin over at Needham.